Hello traders, good weekend. Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. Before we start, big thanks to EightCap broker for continuously supporting our amazing community to enjoy all the special offers we have with EightCap brokers, including the access to the live trading room for short-term trading, the Home Trader Club membership up to 1 year, the trading systems, the indicators for the marketplace, private mentoring sessions and more. Please refer to the link below this video in the description. The first pair of today would be the euro dollar. But before we analyze that, let's take a look on what is expected in terms of news. This coming week is going to be super busy week ahead. So let's take a look on the news. I work with the Forex Factory here for the news, so you can take a look and see as well on the calendar on the coming week. It's going to be very busy, so pay attention. It starts with the CPI, the German and the CPI on Tuesday. Then it follows with consumer confidence and the jobs opening in the US. CPI, quarterly and annual in Australia. Then we have the manufacturing PMI in China. Bank of Japan policy rate and their monetary policy and the rate decision on the coming day as well. On Wednesday, press conference follow, of course, by Japanese bank, and then core CPI and the CPI flash estimate in Eurozone, ADP in the US, GDP in Canada, which cut the rates in the previous week. We have the rates in the US, the main event, right? Nobody is expecting the Fed to cut already, but everyone is expecting the Fed to go and to say, it's coming, let's do it. So this is going to be massive week in terms of the fundamental effect. Pay attention to that. We have the rate decision in Britain, which is expected to cut by quarter. We then have the non-farm payrolls on Friday, if all that was not enough. This is going to be massive week ahead, and it's important to pay attention to what is coming. Why do I start with that? Because all the technical analysis that we will do right now could be or supported by the news and actually make the move, the following move, or absolutely changing the trend. Okay, so I will present it the way that what I expect to see in terms of technical analysis, as we believe in the technical analysis. And you know, it's a very different discussions, I would say, what is better, technical, fundamental. I always say both. I rely on technical analysis. I always keep my eye on fundamental because it could either boost a trend or the moves, or it could change things, and then you have to reanalyze. Do not close your eyes to none of the methods, none of the approaches. So I will be presenting based on the technical view what I expect to happen, where from and up to where, of course, but keep in mind, during the week things could change. We would follow up on the next weekend when see more where do we stand with that. So the euro dollar, the first one. Last week we were talking about, by last week I mean in the last weekly forecast, our plan was the expectations to see the second move to the downside after some pullback. Now let's take a look on the numbers in the trend snapshot. That's one of the features we have in Home Trader Club. Take a look where the euros stand. The monthly is still very positive, over 1%, while the 7 days negative and get lower, but close to 0.5% on the negative. The last 7 days didn't do much. Sorry, the last 24 hours didn't do much. And that brings me to the conclusion based on these numbers, only based on these numbers. The buyers are still here and still will likely to show their interest. And if that is so, we will need to try and determine where is it possibly happening from. So one of the scenarios we are following now for weeks is that the euro dollar is moving in some sort of a range here before it potentially breaks up and continues to complete the final rally or the final leg. However, the possibility that the euro will actually go and complete the ABCD is still there as well. The 200 moving average, the dynamic resistance, sloping to the downside. So the long-term change based on the average movement here didn't change. It's negative yet. Okay, we have to remember that. So that contradicts the numbers. And that's why you see that the market is basically in the middle of nowhere. We are in sort of a range here without any clear direction. And right now, take a look on this volume profile balance zone. Okay, the market, the sellers and the buyers are, the price is right there in the most, I would say, balanced zone between the buyers and the sellers. So that's why there is no decisive movement at the moment. And still, what's coming next for the euro dollar? As I said before, I believe for the longer run is still a buy. So here are the options I would be following. We have on the euro dollar this rising structure, okay, bullish structure. These levels I'll show now, the demand level and the broken resistance that now will act as a support, and the volume profile zone here. You can see the key supportive line on the daily chart and the volume profile here. All these are key levels. So if the euro dollar managed to complete this final dive towards this zone, that's what I would be looking at. I would be waiting until the euro completes a bullish divergence on this very zone, or a couple of zones we just saw, and from there I would be looking to go long. Alternative scenario is that the euro dollar gains or regains bullish structure, making a sequence of higher highs, higher lows, makes a pullback, and then breaks it up again to continue with the longer term rally. With all the news coming and happening, the bottom line here would be, what will the Fed do? Okay, because the rest are starting to be anticipated. The cut in Britain expected already for a long time. Potential cut in euro, everything is anticipated by the market. The question would be, what will the Fed say if the rate cut is actually coming? It's all about that. After all the other news, the main one is the main event would be that. What will the Fed do, and will they prepare the ground for September cut right before the elections? Makes absolute sense to me. All the other countries already, well, not all, but many of the other countries already in this loop of cutting or preparing for the cut. I think personally the Federal Reserve is preparing the ground also for one cut at least that is coming soon. So the way I see that, as I say, looking for the buys from one of the scenarios. What do you think about the euro dollar? How would you expect this one to move? Are we bullish, or it's just a fake movement and the euro dollar is going to continue its move down all the way? Let me know. How do you see this one in the comment section below this video. Our next one is the pound dollar. Before that, I would like to ask your support and help. If you find value in this video, please hit this like button below the video. If you are new to our channel, please consider to subscribe with the subscribe button below this video. A few words in the comment section would be fantastic help, and feel free to share this video with anyone who you believe can benefit from the trading opportunities and the analysis I share here. Thank you for taking the time to help. Let's continue. The last week on the pound dollar, we discussed about, again, like the euro dollar, expectations of another push to the downside. So during the week, it happened pretty much this way. The question, what's next from here? So let's take a look on the market snapshot as we did with the euro dollar and try to see where are the numbers. So if we take a look on the pound, it is like the euro, very positive in terms of the monthly, like the 7 days in a setback or a pullback. Usually, such numbers hint that the buyers are building up the further continuation to the upside. The way I personally expect to see the pound from here, so we are following the next scenario for a long time. The break of this range, the expectations of a pullback, right, back to the balance zone, and from there further continuation until the weekly chart will go and complete its cycle. Did anything change here? Not from my point of view. On a daily chart, we have a bullish structure, sequence of higher highs, higher lows. That all that happened after the break of this range. So the current pullback closer to the retest zone is very likely, very possible. We still could see here a bullish hidden divergence, higher lows on the chart versus lower lows on the indicator. That could go and actually happen. And from there, I still expect the pound dollar continue all the way to the upside. So right now, the way I see that the pound has key levels, one of them is here, the other one is here, and of course the retest of the trend line from the daily chart which we saw. I would be looking for the pound dollar to create its bullish signs around this zone, maybe slightly lower than that, and from there probably continue to the upside. The ideal scenario would be here if the pound managed to create, like the euro dollar, some sort of a bullish divergence here, create a convenient, comfortable hold around the key zone, and from there complete the bullish signs and start its rally. Buy the dips with the bullish formation, of course, would be my trading plan on the pound dollar. What do you see from this one? Let me know in the comment section. Next one, pound yen. As you might remember if you watched the previous weekly forecast, one of the scenarios we were talking about is further expectations from the pair to push lower before it makes a deeper pullback and continue down. So I admit it went below the levels I expected. I was expecting to see some bounce from this area. It went even beyond that, which is great. It is a very healthy sign that we now break that daily low. Okay, this is a very, very, very good sign. So the question is, what is coming next? Is that over? So we have, well, first of all, what happened with the yens? The Central Bank of Japan prepares the ground for a potential further interventions in all the quantitative easings, and of course the interest rates. They are preparing the ground for potential more hikes. Hikes, while everybody else is cutting, of course brings some strength to the yens. That's the instant reactions. Yes, it went below and beyond the usual average movements, but what does that all mean? So as you remember, we analyzed on the last few weeks, we analyzed this scenario. As soon as we reach the supply zone here, we should be facing a deeper retrace on the downside. On the weekly chart, we were facing a bearish, massive bearish divergence on a moving average of the MACD. So the expectations were to see a drop down, and I don't think this is anywhere close to be done. Take a look on the Bollinger Bands condition. Last time we were riding over 20 candles right every time the market dropped to the opposite Bollinger Band. Now it didn't. So pullbacks here, if happen, should bring further drop down to the lower band, probably even beyond that. I think we should see the pound yen at least around these levels once again, maybe even beyond that, closer to the rising trend line. So for me, all that means sell the rallies. At the moment we have the 3 lower highs, lower lows. We are riding for more than 20 candles on the lower band, which means by itself this is a good zone to experience or face potential pullbacks, and that's what I would expect from the pound yen. Either making the corrective movements here, or first of all attempting to make another final low with the bullish divergence, and then start much deeper correction to the upside. I believe we are now around this zone due to corrections, but I don't think the long term is over. I believe sell the rallies should continue and be the plan. We have a major balance levels here, and any retrace closer to these zones should be a trigger for further continuation to the downside. Sell the rallies was and remains my plan for the pound yen. How do you see this one? Let me know in the comments. The final one for today would be gold. Not because I see anything dramatic here, because I believe the short-term opportunities could provide some interesting trading. While the long-term to me is yet blurred or not prepared, the short-term could really be interesting. During the last week, we were trading the gold. Let me show you this one in our the short-term trading project, the live trading room project I mentioned before at the beginning of the video, that we have together with EightCap broker. If you want to join this project and enjoy all these short-term day trading opportunities and short-term trading opportunities we publish there, then you are more than welcome, of course. The link below this video in the description. Now here is what we were looking. This was our sell zone for the gold, and gold delivers here, if you can see, a beautiful, this is our sell zone, a beautiful drop down. Now why do I show you that? Because first of all, so you know what we do in the live trading room, of course, but second thing is because I believe these short-term opportunities are here yet to stay. Long-term is yet blurred, but getting interesting. Short-term could be there. On the long-term, we do have a major divergence developing. I say developing because we are still missing a final peak here on the monthly chart. But take a look on these candles, how many upper spikes we have. Usually it's a sign that the buyers are running out of steam. Every time we face that, especially on the higher time frames, big spikes, the market found a way to make a pullback. But there is no divergence completed there, so it still takes time. Weekly chart similar. We don't have divergence completed, there are lots of spikes. So the only thing we do have on the short term is the daily chart that made a bearish divergence. While the market made the higher highs, indicator made lower highs, indicating that the buyers are starting to lose their momentum and greed. So the interesting part happening right now on the 4-hour chart. 4-hour chart arguably made 3 lows, lower highs, lower lows, but even if not, it made 2 lower highs, lower lows, but there is nothing against that, it's over. So the way I see that, the most recent trend line was broken and retested. I believe due to the higher time frame divergence, we should still be looking to sell the rallies. So my point of view for the gold, that it's still under short-term bearish pressure and rallies are yet to be sold. The reason is here, I believe that as the inflation pressure starts to ease, the safety net that so many traders saw in the gold for all the instability could slowly, the money from gold could slowly shift to other places. So the way I see that, there is a good probability that the gold is still bearish. Key levels I would be paying attention to on gold for possible sell-offs. Basically here we have the broken support that now will act as a resistance. If it holds, it's a very good zone for possible sell-offs, and if not, the next key level we have in mind is of course the same level that hold it already in the past. Supply, big spike of sellers, big spikes of sellers. This area could be also a great one to look for short-term sell opportunities. For me, it's at the moment only short-term. I don't see anything long-term here yet, and sell the rallies is still my plan here. What do you think about the gold? Let me know in the comment section. That would be it for this video. Thank you for watching. Please don't forget to like if you enjoyed it and you enjoyed the opportunities. And once again, thanks for your time. I want to invite you to our trading family, the Home Trader Club, to join us. Follow the link below this video. That's where you will get your access to the full courses, real-time education and real-time trading opportunities so much more. Join our family with the link below this video in the description or with the offers we have with EightCap broker. Thanks again. Best to you and yours. I'll see you soon with more. Good trading and good weekend ahead. Bye for now.